Inflation is going to run out of control. But remember, they've already slowed down the pace. They only went 25 basis points. And even if we get a couple of more 25 basis point hikes, it's not nearly enough. And also, you have to look at the effect that higher rates have had on consumer behavior, which is pretty much nothing, because credit card debt is at an all-time high. Savings are at an all-time low. So the higher interest rates have not stopped spending and encouraged savings, which is exactly what has to happen to bring down inflation. Meanwhile, as I said earlier, the government continues to increase spending. And if Powell thinks that a slowdown in the economy is going to reduce inflation, he's wrong again. That's actually going to fuel the inflation fire. So the real risk is that we end up with a financial crisis and a much more severe recession than the Fed recognizes. And then the Fed tries to prop up the economy and try to stimulate or combat the financial crisis by creating even more inflation. Inflation is going to get much worse. In fact, what I heard from Fed Chair Powell was a lot of economic ignorance, especially when it comes to inflation. First of all, he said that he welcomes the disinflation. That disinflation is transitory. Maybe he doesn't realize that yet, but it is. But he also claimed that inflation is caused by consumer expectations. He's wrong. Expectations don't cause inflation. Neither do wages and prices. He said he was worried that maybe a wage price spiral could develop, and that's why the Fed wants to make sure it doesn't happen. The wage price spiral was a fiction invented by Keynesians. Inflation is caused by the government. It's caused by the Federal Reserve printing money and then Congress spending money. That's it. And spending is going up. In fact, he encouraged Congress to raise the debt ceiling so Congress can borrow and spend even more money. Ultimately, the Fed is going to monetize that debt. And we've only seen the beginning of inflation. And in fact, Powell said that inflation is creating misery for families. It's the government that's creating that misery and the Fed, because they're the ones that are creating the inflation. So I think bonds are a sucker bet. I mean, even if you're talking about 5 or 6% yield, inflation is going to average more than 5% over every one of those years. So you're going to lose money in bonds. If you want to avoid losing to inflation, you got to get out of dollar-denominated assets. And foreign dividend-paying stocks are a great place to look, because you can get dividend yields that are as high or higher than some of these bond yields, but you have real assets that can rise in price as inflation continues to erode away the value of the dollar. And, you know, last year the dollar was up, and that subtracted from the returns on my funds. But so far this year, the dollar is down. In fact, today it just hit a new low for the year as gold hit a new high for the year. And I think this could end up being one of the worst years ever for the U.S. dollar, and therefore one of the best years ever maybe for gold.
Yeah, gold's
and so investors should be looking there. I have a gold fund and also emerging markets, which, lagged last year. They're beating the U.S. market so far this year. And I think a weak dollar is going to be particularly bullish for the emerging markets. So investors should be looking there rather than U.S. stocks or U.S. bonds. Well, I think the recession has already started. I think we're in it now. It's just early. In fact, the first quarter was already a negative print. And I don't think it's going to be a mild recession. I think this recession is going to be worse than the Great Recession that started following the 2008 financial crisis. So, and remember, the government didn't see that one coming either. And in fact, when we were 6 or 7 months into that recession, the Federal Reserve and other economists still claimed that there was no recession anywhere in sight. So this recession is going to be much worse than that one. And what's going to make it particularly problematic is inflation, because inflation is actually going to be exacerbated by the recession. So Americans are going to have the worst of both worlds, a worse recession than the Great Recession of '08, but worse inflation than anything we experienced during the 1970s.
We hear the banks are well capitalized this time. They're stronger this time. How could it be a worse recession than 2008?
Well, that's what they said last time, right before the financial crisis. They said the banks were in great shape. Look, the banks are only in good shape until the value of their collateral collapses and people can't repay their loans. That's what happened in the last financial crisis. This one is going to be even bigger because the economy has a lot more debt now than it had in 2008. And Americans are less able to pay it when interest rates rise because the balances are much greater. So we're in much worse shape as a result of all the bailouts and all the stimulus that papered over the last crisis. And so now the one we're dealing with is going to be much worse because we kicked the can down the road instead of solving the problems when we had a chance.
Is there a remedy or is the damage already done?
Well, there's a remedy, but it's not without pain. And unfortunately, it's the middle class and the poor that are going to feel the pain the most. Because if the Fed fights inflation, it's middle class and poor people who are going to suffer the most during the inflation fight. If they don't fight inflation because they think they want to spare the middle class the pain of a horrible recession, well, then they're going to suffer even more with massive inflation.
Well, Peter, before the 2008 crisis, you were one of the only ones who did predict it and were warning people at the time, just to give some context. Let's look at the stock market today. How much further can stocks drop by your calculation?
Well, they can drop a lot farther, and they will drop a lot farther until the Fed does an about-face and acknowledges how weak the economy is. See, the Fed is only pretending it's going to fight inflation because it's also pretending that the economy is strong enough to withstand the fight. It's not. Even though the fight is inadequate to solve the inflation problem, it's going to cause a big problem for the economy that is so levered up on debt. And in fact, you talked about the Target earnings. Earnings are collapsing because Target customers are spending all their money on food. And Target doesn't make big profits selling food. It makes profits selling other goods that Americans are now too poor to afford. And so the bad news is now Target has to really raise prices even more, especially for food.
The inflation problem, if you look at businesses and earnings, they performed well last year, right, with the stimulus, et cetera. It looks like they're getting completely burned at both ends between rising costs and then demand destruction as people can't afford to pay for this stuff, like you said.
Exactly. And, when you have people like Elizabeth Warren claiming that the businesses are gouging the customers, they're not. They're actually not raising prices enough. They have to raise prices more because the businesses have been taking a hit in their margins. And yes, they're going to have to prepare for reduced sales at higher prices because customers don't have the money, and that's when the layoffs begin. See, that's the problem. As companies have to downsize because their customers can't afford their products, those businesses can't afford their workers. And so we're going to get rising inflation and surging unemployment at the same time. Stock up on the stuff that they need now while they can still afford it. I mean, prices are going to go much higher for basic necessities, but eventually the government's going to have price controls, and that means a lot of these necessities won't even be available. You think we have shortages now, wait till you see how bad they get when government imposes price controls. So my advice is to shop now, buy what you can while it's still on the shelves and before prices go even higher.
Got about 30 seconds, Peter. You really think the government is going to apply price controls? How would that look?
Well, it would look horrible. I mean, we did it in the 1970s. Why wouldn't they do it again? The government has a history of repeating its mistakes. It never learns from them. Well, the U.S. economy is an absolute disaster. I mean, thanks to Fed policy over the last decade or so, we have a gigantic bubble. We never had a real recovery. We just had a financial bubble, and we dug ourselves into a much deeper hole than the one the Fed put us in 2008, following the financial crisis that they also created with the same type of monetary policy that is creating the crisis that we're heading for, which is going to be far worse than what we experienced in 2008. I mean, not only is inflation going to get much worse than it already is, but we're going to have a worse financial crisis than the one we had in 2008. So this is going to be the worst recession that the U.S. has ever experienced. It may even be worse than the Great Depression. It will certainly feel worse for most people because in the Depression, at least people got the relief of falling prices. This time, consumers are going to feel the sting of dramatically higher prices. The only reason we had positive GDP in Q3 was because of a big improvement in our trade deficit. Now, we still had a huge trade deficit. It just wasn't as big as it had been in the prior couple of quarters. That was thanks to two factors. One, the strong dollar, which is now reversing. The dollar just had its worst month in 12 years, and it's falling again sharply today. So that's going to push the trade deficit up. In fact, the trade deficit in November that was released yesterday swelled by 10%. It was a huge jump. But the other factor that helped bring down the trade deficit was all the oil that Biden released from the Strategic Petroleum Reserve. Oil companies were able to buy that oil and then export it. And so that artificially boosted our exports, which improved GDP. But pretty soon we're going to run out of the oil in the Strategic Reserve. There won't be a reserve left. And so we won't be able to rely on that crutch. So I think Q4, I mean, the economic news that came out yesterday and today was horrific. So I think we're going to have a big negative number for Q4 GDP. And so we're going to end the year on a low note. And I think we're going to have another negative quarter in Q1 of 2023. Prices are up. So if you factor in inflation, retail sales are down. In fact, look, construction spending numbers came out today and they're down, but construction costs have skyrocketed. So the fact that spending is down, even though the cost of building has soared, that tells you that construction projects have ground to a halt really in this country. People are just not building because nobody can afford to buy what gets built.